Hi everyone. Recently, US CFTC approved the perpetual future trading for crypto in the United States. Because of this, the market is very excited. This is the most common type of crypto derivative. It has no end date, so it uses a funding fee to balance the price gap between cash and futures. Today, we are going to look at what is this rule and how this rule can impact to the crypto and digital asset market, and what is why the United States is trying to push these digital asset laws recently. Before we start, I post global news every day on my YouTube shorts. I strongly believe this will help your investment decisions, so please check them out and subscribe to the channel so you don't miss any of them. Okay, then let's get started. Well, I just said the new law is passed, but actually some US investors might think, wait, I was already trading Bitcoin, Ethereum, Solana, and Ripple perpetual futures on Coinbase. You're right. To follow US rules, Coinbase made some special rules like a US style version. They set a very long 5-year end date and added the funding fee system. But this was an exception made for strict rules. Most other US investors had to turn on VPN and wander around global sites to trade real perpetual futures. However, things changed this time when the CFTC approved this trading inside the US for the first time. They gave an OK to Kraken. They also gave Coinbase a no action letter. This allows Coinbase to connect with Deribit, a global exchange for trading. So what is the no action letter? It is a document from a government saying they will not punish you. It basically means it is safe to trade. The issue is important because it matches the recent move of the US SEC and CFTC. Right now, both groups are working hard to open the crypto market legally in the US by making shared rules. Two united rules, they clearly called 16 major coins commodities, not securities. So what does that mean? In the past, during the Biden administration, the crypto industry and SEC were always fighting in court about the security issue. And they made rules without clear standards, saying things like Ethereum staking is a security or any asset with a staking function is a security. Because of this, companies had a hard time entering the market and growth was blocked. But this time, both groups clearly said, we will not punish these 16 assets over security issues, and they belong to the CFTC. Thanks to this, perpetual futures based on these coins will be traded legally in the US now. Starting with Kraken's Bitcoin future approval, derivatives for major L1 network coins will open step by step. However, there are limits in the official market. On-chain, many exchanges offer high leverage and no KYC, like a background for trading. But since the CFTC head cares most about protecting investors, the US will likely limit the leverage and only allow trading on a few registered sites. Also, real-world asset RWA futures like S&P 500 or US stocks are actively traded right now, but US stocks are under the SEC, while perpetual futures are under the CFTC. This can cause complex legal issues. So for now, the US major crypto products will be allowed slowly one by one. Then what will happen to the decentralized exchanges system on the blockchain? Currently, perpetual futures DEXs like Hyperliquid, Aster, and Lira are getting lots of attention. They act like normal exchanges but are decentralized. Just because a legal market opens in the US doesn't mean these DEXs will be hurt. Actually, it is a good news that makes the whole market bigger. The official US market requires ID checks and limits leverage, but DEXs have no central boss, so they skip ID checks and allow very high leverage. Also, on DEXs, you can freely trade futures based on stocks like S&P 500, SpaceX, and OpenAI, not just crypto. So they act as a clear alternative. Among these DEXs, Hyperliquid currently holds the biggest market share and is very active. You can trade right away just by connecting your wallet. People say the payment experience is great. The main reason Hyperliquid gets so much attention is its token buyback system. It has an economy model where the profits directly boost the value of its own token. This makes it very popular among investors. However, the model also depends entirely on the protocol's profits, which means the trading volume. If the whole market goes down or trading volume drops due to a specific issue, even a great buyback model will shrink. You must always remember that the token's value can change a lot depending on the overall trading volume. Looking at the bigger picture, what we are seeing right now is massive shift of wealth into digital asset inside the US. The US government is no longer trying to block the crypto. Instead, they are moving fast to build and adopt a completely new financial system. By bringing perpetual futures into the legal zone and making a clear rules, the US is preparing for a world where digital asset and traditional finance live together. This means the crypto is getting into a whole new era. It is transforming from a risky playground to a major institutional financial market. As big money from Wall Street and global investors flows into this system, the entire digital asset ecosystem, including both official, regulated exchange, and decentralized platform, will grow much faster and larger than before. The era of real digital finance has finally begun, and the US is trying to lead this market. Thank you for watching my video today. I'll come back with another fun and interesting stock and market insight. See you in the next video.